in terms of, can you just give us an idea of the size of the scale of the potential market that you're looking to invest in and the amount of money being poured into these new technologies across everything from defense through to a startup in some company which could flog its technology?
So, yeah, that's a good question. It's hard to define. What I would say is, say, if you just take quantum, because that number I've seen recently, McKinsey, their latest report said by 2033, the quantum market globally is $2 trillion, worth $2 trillion, right? You've got to believe AI is a multiple of that by 2033.
Yep.
Right? And then there's some overlap between AI and quantum. There'll be some overlap between defense tech and quantum and AI, but you have to believe that defense technology must be in the hundreds of billions between now and 2033. Right? So these are really large markets. I think as a firm, we're $500 million US firm.
Okay.
And I think, can we see ourselves getting to $1 billion, $2 billion? Sure. But our strategy will probably be to get to a certain level and shrink the size of the firm. Because with venture capital, getting too large actually leads to negative selection. Right. And I'll use SoftBank as an example. So, a groundbreaking event in the history of venture capital is when they set up the Vision Fund, which was $100 billion. Right? Which is great. And they made 2% management fee on that money. The problem with it is you can't write $5 million checks.
Yeah, true.
Not when you're 100, right? You're forced to find companies where you can write not even 100 million. You've got to very quickly, over 2 or 3 rounds, write $1 billion. And that just leads to negative selection. That leads to deploying too much capital. Right? Because actually building a business, being slightly capital constrained, is not a bad thing. I mean, often when we're talking to real sort of pre-seed, seed level startups, and the founder will say, look, I'd like to raise 20 million. And I'll say to them, do you need 20 million? They'll say, I think I need 20 million. And so I said, look, tell me what $20 million is. And they'll sort of look at me and I'll say, okay, so in your lifetime, what's the largest check that's ever been deposited in your bank account?
Yep.
What is the largest purchase you've ever made? Right. So you've got 5 people, you want $20 million. How are you going to spend that money? And often when people raise that much money, they waste it. Right? Because even spending money productively in a startup context is a learned behavior. Right? So size for size sake is not our ambition of our firm. Returning capital. So we have a multiple on invested capital since inception of 2.4x. We think it's going to get to 5 to 6x within 2 to 3 years.
Yeah, right. Okay.
Now, today, if you look at venture capital funds of a similar duration, so 5 years, right? That duration. The top deciles at 1.6x. We believe we're going to gap out because we're investing in these thematics that have structural tailwinds.
Yeah, okay, right.
And some of these firms have portfolios that have structural headwinds because they invested in 2020, 2021 in blockchain, in crypto, in NFTs, right?
Yep.
But we want to keep those metrics super high. And we'd rather dividend out half the market cap or 2/3 of the market cap of the firm than actually just get bigger and bigger and bigger, because then we fall into a trap. To move the needle, we've got to write a $50 million check.
Right.
Maybe the company only needs 15. Right.
Yep.
So that's a sort of always a complex dynamic. And when we set up the firm, we tried to design the incentives that we're not incentivized to just grow the headline metrics.